All right, this is part 2 to the accounting video. Now we're going to first deal with what we call double entry principle before we deal with the effects on the accounting equation. What does the double entry principle tell us? The double entry principle simply tells us that any moment that a transaction happens, two accounts are going to be affected, hence the word double. So let's go and find out how does that apply. David's beauty salon is owned by David Arnold's. The following are transactions that happened in the month of May 2025. So here we've got a salon called David's Beauty Salon, and the owner is Mr. David Arnold's. And the transactions which are here below, we are being told that they happened in May 2025. First transaction, we are told that David Arnold's deposited 50,000 rands into the business bank account as capital contribution, and a receipt was issued, receipt number 001. So what do? We recognize that the owner of the business, Mr. David Arnold, he contributed 50,000, and that 50,000 that he contributed, that is capital. Meaning to say that Mr. David has got plus 50,000 in the business, so the capital account has been affected. How has it been affected? It has been affected through the increase of capital. Which other account has been affected? It is the asset of bank. How has it been affected? The bank has been affected by what? An increase of money, which is 50,000 rands, which came from the owner of the business, Mr. David Arnold. So when we come and we record, this is how we record here. Now we come and we say that under our assets, there is a plus 50,000 rands, which has happened. Which asset increased? Or the bank increased, right? So we are done recording the first transaction. Let me just write here plus 50,000 here. And the reason there is an increase of money in the bank account. Then we go to the second account, which is what? Which is the owner's equity. Remember the capital that the owner of the business gave, its owner's equity. So how much? It is increased by 50,000 rands. So that was the first transaction. We have filled out the two accounts, and we are done with our double entry principle for the first transaction. We go to the second transaction. Now it says cash received for services rendered. Cash received for services rendered. What do we know about services rendered? Services rendered is what we call current income. Current income. This is money which is made what? This is money which is made because, remember, this is a salon. So probably they plaited hair or they dyed hair or anything of that sort. So the cash which was rendered for the services by the end of the day was 7,400. So what's happening? There is an increase in bank. Remember, cash is known as bank. When we are recording it, we record any cash that has been received, we record it as bank, and bank is an asset. And also there is an increase in current income, and current income is owner's equity. So what do? We now come here and we say plus 7,400. This money went into the bank account. Then we have got what? Plus 7,400. What is this for? Under the owner's equity. This is current income. Current income. So whenever you have got services which were rendered, you record it as current income. And just like that, we have recorded our two accounts. Now let's go to the next transaction, which happened on the 5th. What happened? We received 3,000 rand from Mrs. Susan Smith for rental of the building. So our building, the building that is owned by the business, there is extra space. And instead of that extra space gathering dust, we rent it out so that we can make money. The money that we receive from the money that we receive from the rental of the building, that's what we call rental income. We call it rental income. And rental income is what? Owner's equity. And this 3,000 does not stay in our register, it stays where? In the bank. So this is bank. So we are going to record two transactions. Now we're going to say plus 3,000 rands 3,000 rands bank, and we're going to say plus 3,000 rands rental income, right? And just like that, we have recorded our two transactions. Then we go to the what? We go to the 8th, where it's written cash received for services rendered according to the cash register row of 2,000 rands, right? So here on the 8th, we've got two transactions. Please observe that we've got two transactions, and these two transactions you would need to wait for the video. The third video that I'm going to make using this transaction, it's about how to record in the cash receipts journal. So you need to watch that video so that you may know how do you deal with these transactions which are happening on the same day, right? So now it says cash received for services rendered according to the cash register row, which is 2,000 rands. We know that services rendered, it's what? Current income, and this cash which we have received, it goes into the what? Bank account. So how much? 2,000 rands. So now we say plus 2,000, which is going to the bank, and plus another 2,000 rands, which is for current income. And just like that, we are done. Then we go to the last transaction. It says David Arnold's made a further capital contribution of 10,000 rands. So David Arnold's made a further capital contribution of 10,000 rands, which means that there is bank and capital. So we say plus 10,000 rands, which is bank, plus 10,000 rands, which is capital. And just like that, we are done. So if you found this video to be helpful, please stick around for the third part. Also consider to subscribe, share, like, and comment. Till we meet next time. Thank you.